Ladies and gentlemen, hello. Welcome and hello and welcome. This is going to be a really fun episode. It might not be too long. Okay, I'm going to try to keep it short as I am getting getting busy as the crunch is starting to increase. And I apologize for not being here live yesterday. I did only alert the Twitter people. So if you guys aren't following me on Twitter or X, you can do that right over here. But guys, good to see you all. And we are going to get started. So today, I want to talk about Affirm. People are seemingly not talking about this company a lot right now, even though it is 5x year to date. I mean, SoFi has had a good run, more than doubling since the year had begun, but Affirm has just absolutely taken off. And for the people that were able to get it, even you don't even have to be getting it right at the start of the year. I mean, you could have gotten it 6 months ago or even less, maybe even 4 months ago, and still more than tripled your money. That's an extremely great buy, and congratulations to you guys. Myself, I wasn't able to catch the Affirm rise. I don't actually believe in this company still to this day. I mean, I love their mission, I love their management, but I cannot get behind how they beat out their competitors. And that is what the conversation of this topic is going to be, because I want to show you guys some of the conversation about what's going on around buy now, pay later right now, who their big competitors are, what they have to go up against, and how much it's going to cost them to even make a dent against some of these other players and try to catch some market share. Let me first start off with what I'm talking about and show you how things have gone today as of one. I thought that this was quite funny and exciting. And let me just share my screen really quickly. Anyone know who this guy is on the left?
Help at a Walmart now, you can still do buy now, pay later. Although at these self-checkouts, I like to say maybe people do steal now, never pay.
Well, Costco says that people have, a lot of times they have watermelons underneath and they forgot to pay for the watermelons.
Right.
But
you want to come back to this name, why?
Yes, because you see, David, this is this company with profits.
GameStop.
It's memeified?
It's memeified.
Because there was a big short position?
There's a 22% short position. Max Levchin turned out to not have bad loans. He was supposed to be the guy who was hurt the most when Jamie Dimon's 6% number occurred. Remember, Jamie thought the rates were going to go to 6. They didn't. So then next thing you know, they're cutting rates. They have very few bad loans. The Walmart, they already had that deal, but that was the kind of thing the memesters say, oh,
right.
It's like, wow.
Right.
They
should not have been. What would the stock go up yesterday?
No, you can buy an icy. You can buy an icy with Affirm. Boom. It's one of those, right? I mean, you go to Target and they'll let you buy the Cat and Jack. Boom. So anyway, this is one of the great short squeezes. And today, Mizuho contributes to it by saying that pretty soon there'll be direct deposit, David. You're going to have an Affirm card, rapid adoption, sounds a little like Block, formerly Square, full services. Affirm money account could turn plastic into gold. Boom!
I don't even understand what you told me.
Well, I'm just
direct
saying,
deposit of what?
Okay. Well,
what's getting direct deposit?
All right, let's just cut to the chase.
So let's talk about that, because we do have the answers. He's not wrong. They are looking. They are looking for direct deposits. They are. Well, they will be. I guess I should say, not that they are. The Affirm card will turn plastic into gold. The problem is that the stock has just pushed so much of this forward. And whether you believe in this meme mania, I mean, potentially. I don't think so. I'm more of a fundamental investor. I mean, if you think that potentially it still has some more go in it, but I don't even think that that's necessarily true, because it had quite a Kramer effect here. After old Jimmy Boy was covering the stock today, it actually went down 10%, trying to do a slow recovery. But I actually have a different pick on Affirm that's going to benefit off of Affirm, but potentially see an even larger impact on their stock than what Affirm is going to see. That is today's video. But first, I wanted to bring up something. So Adobe Analytics, for one, also talked about between the times of January 1st to December 6th. Okay, so essentially the entire year, what they saw was that consumer spend had reached over $65 billion in terms of buy now, pay later spend. Okay, $65 billion. That was up from 15% from a year ago. 15%. Nothing, we're not talking about 55%. So yes, buy now, pay later is all the craze, but it's not growing at exponential rates that some people are talking about. Now, you could say, well, Affirm could be growing faster than what those marketplaces are saying. Okay, fair enough. This is where I'd like to point you to next would be PayPal. PayPal has actually been doing buy now, pay later as well. They've been doing it for about 2 years. And in fact, this number right here, where it shows they have 32.2 million users, they actually reported this back in Q1 of 2022. We are about 10 to 11 days away from finishing out Q4. If I were to guess, I'd probably say somewhere north of 40 million users at this point. That's not, talking about them expanding even more globally or opening up to someone even like myself, right? I use Affirm because they're in Canada. I don't have access to buy now, pay later with PayPal. However, I've been using PayPal a lot more, trying to get used to their products more and more. And I like them. They're a great service. I mean, who doesn't know PayPal? But I also wanted to show off this. The customers at PayPal seem to love buy now, pay later, and almost 82 NPS score, which shows the satisfaction across different cohorts. But in fact, they also rank this across other competitors. And if you were to add up Afterpay, Klarna's, and Affirm's satisfaction and preferred buy now, pay later provider, that also equals the same rate at which people are willing to use PayPal at. Okay. Affirm being the, fourth lowest on this list as of today, even higher at 50% whenever you get to high income cohorts, which is quite exciting. There was also different categories that they ranked PayPal for buy now, pay later, and they scored top scores in 5 out of the 12 criteria. Not a single other company had scored in the top of one singular category. So they saw privacy, transparency, and security of buy now, pay later products, all very, very exciting. Now, the exciting part, or at least why I think it would be so hard for a firm to have any sort of pricing power against a company like PayPal, which is the one that I really think that they have to fear, let alone Klarna and Afterpay and all of these other companies, is that they don't need the money off of buy now, pay later, right? PayPal does this at a 0% APR, and they offer these rates, but not just so then they can make money off buy now, pay later, but mainly so then they can cross-sell you onto the overall digital platform. If you use them for credit, then potentially you're more likely to use them as an overall wallet in general. So they have a way of lowering their cost to serve on buy now, pay later, or essentially lower their need for payment on buy now, pay later, and offer a better solution out to their customers rather than what a firm has to do, which is either accept payment from the client or accept payment from the merchant, which are two also opportunities, right? That PayPal could do. They could start asking for merchant discount rates. They could start asking for APR from the clients for riskier cohorts, right? Those are things that are still in their wheelhouse. It's just a matter of the clients that they're going after, which is already at probably 40 million plus. They're just not needing to do so. This worries me, not in the size that a firm needs to get, or a firm is right now. They'll obviously have a great cohort of clients, but it's where they have to be to afford the market cap that people are putting on their stock right now. They're almost at a 9 times price to sales on this company. Yes, okay, they will see good growth from this quarter just recently on Black Friday. But if you actually look at the website traffic, it's nothing spectacular versus the likes of even a PayPal. They even saw similar growths around the times of Black Friday. So, PayPal or Affirm, they're both seeing similar rates. One is going to benefit drastically more in terms of just the overall revenue intake from buy now, pay later. But it's the same thing as what I say whenever Apple was getting into the checking accounts and credit cards for SoFi. It will affect the growth rates of fintechs if they're taking billions out of the marketplaces of where people might have gone to. Now, the comeback to that, like what Tevis always likes to say, is that potentially PayPal could be showing people the light of buy now, pay later, and then potentially realizing that Affirm might be the better option later on because they have more flexible payment options, which to my, in my relation to that, and this is not Tevis's quote or anything along these lines, it's just how people might spin it in terms of giving Affirm the benefit of the doubt, is just the fact that those flexible payment terms is not a hard coding problem, right? Whether you want to accept payments over 4 periods, 6 periods, or 12 periods is not a hard option. It's just easy for PayPal to understand. Now, I want to be clear about something. I am super bullish on buy now, pay later. I think that it's amazing for the consumer. A lot of people are anti buy now, pay later because right now it's not as transparent because people have potentially not the Affirm app. They will have just used it through a checkout and then they have no way of tracking it. It gets pulled out of your account randomly. Yes, they might get an update here and there via email, but still, it's not as clear as potentially credit card debt or something like this because it's built into your bank, right? But this is why services like Galileo Technologies offers banks buy now, pay later. That's why MasterCard is trying to do this. That's why PayPal is offering these more integrated solutions, because buy now, pay later works whenever the customer knows how much money they can't spend, right? What percentage of your overall account have you used over 6 different buy now, pay later loans that the money is just not yours, right? For the average person, it's okay to say, hey, a couple $1,000s over here, this eventually is going to come out of your account over the next 3 months, whatever. Perfectly fine. As long as it's used safely, which over time, like this is the equation I always like to use is if it's faster, if it's cheaper to use, but not, or if it's faster and cheaper, but not yet easy to use, that's the breakthrough technology that you want to find. And that's exactly where buy now, pay later is right now, because it's not built into your bank, but yet it is so great for the consumer. With that being said though, okay, I want to talk about a little bit of extra details, right? Because another reason why Affirm is bumping up so much is on a couple different things. So we'll talk about Affirm Card. We'll talk about their money management solution, their money management accounts. And then also interest rates going down, right? What the Jim Cramer had just said on the video that we were playing, where he said, hey, because interest rates didn't go so high and Affirm actually had amazing underwriting, that they weren't actually punished, right? Now that it's coming back down, they're going to benefit. And to a degree, they might benefit on the idea that default goes down just like any other lender in the entire market. But what they might not benefit from nearly as much as the company like SoFi or Lending Club or Upstart, for example, is the idea that they are going to benefit from the fair value of their loans going up as interest rates drop. And the reason is just that the life of their loans are just so short from Affirm. They have very, very short loans. And so the idea of potentially needing 3 or 4 rate cuts that come this year, 2024, which would be amazing, right? For companies like SoFi, they might not be as beneficial to a company like Affirm because a lot of that principal will have already been paid off by the time that those interest rates actually come about. Now, I know what you're probably thinking, but Tanner, the new loans will benefit from this rate cut. Well, that's not necessarily true. I mean, the coupon rates of those loans as they are getting cut are also going to be decreased or depressed in nature as well. So you might not see that great advantage like you would, some of these other companies like SoFi with student loans that are, much, much longer terms. So I think potentially this could be a stock that's memeified. However, at these high short interests on Affirm, I just can't believe that Affirm and SoFi have similar shortings. Like, I just find that so silly. Affirm is in such a scarier place, in my opinion, in terms of overvaluation, not in terms of that the company is going to go bankrupt or anything like this. Like, I think Max Levchin's going to make a great company out of this, but there might be a better play than we think to benefit off of Affirm's success if, for example, they have secondary product lines that benefit greater than their original checkout product. Oh, and gosh, we haven't, there's so much more I want to cover, but this company is one that I rarely talk about. However, it's not unknown to be on the channel. Marqeta. Marqeta, if you guys don't know, is the platform that actually does the payments, or it does the the actual payment platform for the Affirm card. Okay, they also do it for the Cash App card, for a bunch of different ones. They actually deal with JP Morgan's virtual card as well. They're a direct competitor to Galileo. And I don't know why I said that so weird, but this one I think is very interesting because it's not nearly as such a high valuation as Affirm. In fact, whenever Affirm had 5x, let me see if I still have that chart up. Let me see if I can bring this up for you guys. Yeah, so year to date, whenever Affirm had 5x on the idea that if Mizuho is correct, Dan Dolev, his number one pick, okay, is Affirm. And the reason for that is that they are going to revolutionize this plastic card on the Affirm card, and they are going to see sort of a Cash App revolution, right? Where you go from potentially 500,000 cards to 40 million. Sure, I believe it. Marqeta would then sign 40 million cards, and yet the stock has raised just a little over 10% year to date, right? They've seen a ton of growth this year. They've seen growth because they have the Cash App card, they have Coinbase, they've got Lyft, they've got Uber, they've got JP Morgan virtual card, they've got all these different ones. I have actually a list. I can bring it up. I don't have it up right now. But so I would actually place my bets on a company like Marqeta benefiting from this more than I would on Affirm at this rate. If you're looking to get into a stock to catch this meme craze, I mean, hey, I was not one paying attention to GME whenever that craze happened, just because I'm just too fundamentally focused. Okay, so if you're trying to do any of that shenanigans with Affirm, have at it, babies. But for me, I want to find a company that finds the revenues and the profits from this shift in finance without having to try to catch a stock that it's already 5x whenever the total addressable market has grown 15%, and potentially their preferenced products throughout all of buy now pay later is actually maybe not going up as fast as people think. I look blurry, do I? Whatever. Okay. I also wanted to talk about Affirm's cash management account, because could be great. Okay. I have a lot of I have a ton of respect for Max Levchin, the CEO of Affirm. Okay. Their ability to find great clientele great partnerships as well. Like, for example, the stock had raised 15% on the fact that they expanded to self-checkout at Walmart stores, which, by the way, like, I didn't look this up before recording, but I'm pretty sure Walmart was closing down on some of their self-checkout stores because the theft was so high that it wasn't even profitable to have them there anymore. If the security increases or something like this, that they'll go back. And yeah, sure, Affirm is great there. The problem is that for them to get these massive clients, like they did with Shopify, like they did with Amazon, like they did with Walmart, they don't pay customer acquisition costs directly for these people, but they pay them in terms of whether it's stock-based options, preferred rates, all of these things to get these massive clientele, which just dilutes shareholders in a way, right? And if you are the likes of something like a Shopify, I mean, hey, I support it because it's a stock that I own, and we got a massive chunk of the stock to get them on our platform, and it benefits our users. I'm not saying that Affirm doesn't offer a good product, but a good product doesn't mean a good stock. And that's a good separation to understand. The stock ran up like 15% on the news that Affirm had, gone about 4,500 different US locations for in-store self-checkout only. It's just like such a small niche thing. I'm aware that the brand is huge, but yeah, it's, in my opinion, it's silly to run up 15% on the idea that the stock is already 5x or more. No wonder it's had a 10% pullback on that news. Silly, in my opinion. But I did want to talk about customer acquisition costs a little bit more. in terms of having to get them to the cash management account, okay, which is a future product. Okay, so let me bring up their thing here. Where is it? In terms of getting them to a potential cash management account, which is going to be the solution for every single company going forward, like what did Andreessen Horowitz said? Every company will be a fintech company. This will be a big part of it, right? Walmart will have one. Samsung will have one. Apple has, well, I mean, all the ones I've named have them. Affirm will have one. SoFi will have one. They're all trying to bring in money. Affirm's going to need to create something that is extremely unique to make sure that people stay on the platform. Even what's on screen saying they're offering 4% APY won't even be enough to potentially, show a competitive niche against SoFi or the likes of another large fintech that's going after high APY individuals. Okay. But then you also have to spend on customer acquisition costs. This is sort of the problem too, is they talk about the Affirm card opportunity. Right now they're at about 500,000. They think that they can get to 40 million eventually, and then raising it up to 240 million at some point, right? To get all of these people on buy now, pay later. Those are all users that could go to Marqeta. I'm happy to pick on that position to see all those benefits, but PayPal has more users than 240 million users that they can start offering buy now, pay later today. In fact, they even said that they're going to give them sort of pre-approved loans to 110 million users by the end of the year on buy now, pay later. 110 million. So they're at 500,000 trying to break into the card market, which I already said, more Marqeta leaning. I just cannot see it. I'm not saying that people can't make money on this stock. They've already proven to be able to do so. I think that Affirm has so many unanswered questions, in my opinion. PayPal's benefit here is unbelievable. It's so crazy. There are stocks that will benefit equally to Affirm growing in their card market and like Marqeta that are at such cheaper valuations that I believe have so much more room to go in terms of Marqeta, right? I don't know. I was looking through some statistics on PayPal in terms of buy now, pay later, just because some people were asking me what my thoughts are on this stock, just like not moving in relation to other fintechs. I think that buy now, pay later, I've always been extremely excited for. It shows higher conversion rates whenever it comes to selling. It shows a massive increase in average order volume. I don't know if you guys have seen, I think it's like 12% increase in sales, 55% increase in average order volume. They're only doing this in 7 different countries. And this was only whenever they said it back in Q2 of 2023. Q2 hadn't even finished yet whenever they put out this event, right? They said 7 countries, 2.7 million merchants, okay? 300,000 of them are already putting that payment option upstream on their detailed pages, okay? Affirm is talking about how many, different merchants they have, 263,000. PayPal's already beating that today. I don't know. I think that it's kind of like David versus Goliath, and people can bet on Affirm being the David, but whenever David has a valuation that's just 5x in a year. I don't know. Plus, PayPal doesn't need to do a CAC cost. It's free to do push notifications, ladies and gentlemen. That's all I wanted to say. Let's do a little Q&A. I'll do 5-6 minutes of Q&A. So post whatever you guys want. Bash me if you're in Affirm and you're rolling in the dough, because I'm happy to hear it. In Mexico, we have had buy now, pay later for more than 15 years. We can get up to 24-month interest-free payments on our purchases. It has been working because credit cards may charge you more than 120% APRs, though. Yeah, so buy now, pay later is not a new solution. It's definitely been, I didn't know it was in Mexico for so long. I have known that it's been in Australia for an extremely long period of time, though. it doesn't matter. It doesn't matter. Just because it's been somewhere else doesn't mean that it's not coming to the US. Like, I have seen firsthand how exciting it is to use a solution like this to get access to someone else's money at zero cost. That, like, I can just keep my money in my checking account earning, 4.5%, happy, fine with it. Why would I ever complain? Um, just keep a balance in your checking account. Just like, okay, if you're not good with finances, buy now, pay later. They shouldn't even be underwriting to you to begin with. Obviously, they can't see every nook and cranny, though. There's, even in the best underwriting, there are flaws. But like, I don't know. It needs to be more transparent, open to the person to see how much that they've borrowed. And with these new smart receipts that are coming out, I believe that the access to buy now, pay later and the understanding of how much you have borrowed will increase over time. What is the penalty for not paying later? For not paying later? Oh, you mean like if you just default? A credit hit? No bashing. Can't we have a discussion? What? What do you mean? Can't we have a discussion? We're having a discussion. We put some puts yesterday late in the day on Affirm. Yeah, so if it does hit like sort of meme status, which I haven't really seen, that, like, for example, I'm making a video on Affirm right now, and it's like on a fintech channel, and we're at 80 users. Happy that you guys are here, but you guys are the people that keep showing up. Where's the Affirm crowd if it's so hot? Like, I mean, back whenever GameStop was going, anyone and their brother could make a freaking GameStop video and it would get tons of views just because the retail audience was amazing. I just don't feel like the heat is there for there to be this massive short squeeze. If anything, I believe that they should probably double down. Is there any fintech ETFs that you recommend we check out if wanting exposure to many fintech stocks? I mean, the only one that even comes to mind is Kathy Woods. But aside from that, no. Oh yeah, different point of view. Yeah, I mean, hey, if you're a fan of Affirm, I mean, it's not the only time I've had a contrarian view. Happy to hear you out. I rarely ever mute or ban anyone, even whenever they say bad things, unless it's like just like horrible obscenities, and then you're gone. But if you just disagree, that's you're 100% welcome. Will PayPal benefit at all from Bitcoin halving or the Bitcoin ETF that's supposed to pass January the 10th? I asked due to PayPal's taking no one's talking about it. I don't know. So what? You're able to buy crypto on Venmo right now. In terms of there being an ETF, you wouldn't be able to purchase that on Venmo, but the ETF could have an effect on the price. So I mean, yeah, there would be a value. It's not a large value, that's for sure. The crypto side of Venmo and PayPal is smaller than the likes of something like a Cash App or a Coinbase. Sure as heck is not going to affect SoFi anymore. Am I right? Why do you hate Bitcoin? I don't hate Bitcoin. It's hard for me to know whenever people are pointing a question at me, but I definitely don't hate Bitcoin. I hold Bitcoin. I'm hating a little bit on Coinbase right now just because the price has gone up so drastically. And I think that they will obviously see like a large increase in trading volume due to the increase in crypto and the resurgence. I just think that the switch from retail over to institution, and like if things like the Bitcoin ETF comes out, these types of products are killers for Coinbase. Coinbase does not benefit off of the Bitcoin ETF. It does in terms of the overall coins are going up, but you're just giving people access to the cheapest way to buy Bitcoin possible, and getting off of an exchange. So you're increasing the security, you're decreasing costs. The ETF is perfect for Bitcoin maximalists, but not, in my opinion, for Coinbase shareholders. So, yeah. I do think that the stock deserved to run. Obviously, with crypto, the price had to go. But it's a lot now. At what price would you buy Affirm at? I don't know. That's a hard one for me to. I haven't thought about the exact valuation. I just am seeing, in my opinion, just an insane overreaction to something that just couldn't be plausible in their fundamentals. I need to take a deeper look at the stock, but it's just something that is not on my radar for buying. I just don't believe them to be the strongest option for buy now, pay later. And I just think like even the whole idea about buy now, pay later is not something that is ultimately super monetizable. Like I do think for a company like PayPal, it's great because you're turning a payments company into sort of like a credit company in a way. It just makes them so much better, in my opinion. But it's an easy transition to say, hey, we already have the customers, we already have all the total payment, or sorry, total payment volume, all these sort of things. Now let's just transfer this over to a higher monetizable option. Great. Finding all new customers, finding all new profits, and it has to profit from buy now, pay later. You don't have a way to fund that growth. And I just see sort of like a, Teams beating out Slack sort of situation happening all over again because Slack had to make that money there, whereas Microsoft could fund it through other means. Now that they're owned by Salesforce, it's a whole other piece, but that just completely killed all the momentum. Very important question. Did you get the chocolate chip cookie from Chick-fil-A? No, I have not been back. I won't be back for a while, to be honest. It was a good sandwich. I'm not knocking it, but like I'm not eating fried chicken every day. I'll go back in like a month. Yeah. Assuming we get into a recession, do you think it's good or bad for SoFi compared to other banks? Will SoFi get out of a recession better than other banks do? I would say it's worse off for SoFi, just because of the size and the amount of capital that they have. That like, but I don't know. It's like in terms of that question. I mean, I would assume they'd be worse off. I would assume just because those banks have so much flexibility in their capital. They make so much money that they could decrease dividends or not do buybacks right now to have so many safety nets. SoFi doesn't have that option, Yeah. Do you think that Affirm will run and continue to maintain the stock price? No. No, I think that it needs to have a correction. And I think we're already starting to see that today. Like in the first sign of a bad market, you can see the stocks that hold up their price as well, and the ones that sort of crumble. And today was an exceptionally bad day, but it hit the really fast growers very hard. Upstart I think was down 8%. I think SoFi was down like 6% because that had a real big run up recently. I think that we're at fragile times, and I think we'll need to see more. Like Q4 will be important. Will Q4 be important to, well, not their Q4, I mean their fiscal Q2. Will their fiscal Q2 for Affirm be as important as SoFi's Q4? No. It just won't. Yeah, PayPal held up decent. Yeah, I know. How about Neo? And Neo's fine. I hold a little bit of Neo. SoFi took a body blow. I'm averaging down. Yeah, I'm still like it's funny. It seems like a body blow. The stock is so green, guys. It's it took a body blow. It's only at 9:30. You guys obviously weren't in the trenches, okay? I'm still eating meat and potatoes right now. This is not the ramen noodle days at $4. Okay, let's get back in the trenches one day. This is primetime TV. I'm still happy. One bad day is not going to turn me off. And hey, if you're Affirm shareholders, I'm not saying you should be turned off from your gains. You guys are doing phenomenally year to date. Okay, enjoy it. But I need someone that actually has a real bull case somehow prove to me that this stock, you don't have to prove to me, but like just give me your reasoning. Like I've sat down with people that talk about Affirm, and it's just like, I don't know. It seems like they want the stock to work cuz like I don't feel that way. Yeah. Yeah, down 50 cents. That's the blow. It was over $10 today. That was exciting. $10.16 or something like this. It does feel good. Affirm, I just don't get. Roy, why don't we have a conversation about buy now, pay later one of these times? You tell me what your thoughts are on the benefits that PayPal has, because obviously it's such a small percentage of their overall income. But I also think they have the strongest like advantage in this market. They have all the customers. They don't need the monetization. Yeah. Anyway, sometimes I feel like I do that. I ask someone a question, then I prompt their question with my answer to that question. Bad. Yeah. Invite now, talk later. All right. Yeah, that was the longest 4 minutes that I said, or 5 minutes that I said I would talk. It's almost 14 minutes now. So, ladies and gentlemen, thank you all so much for watching. I do appreciate your time, but I'll see you guys tomorrow. Hopefully, I'll let you guys know if you guys aren't. If I can ask one thing of you, just go here. If you guys are on X, follow me at Future Investing. There's no I. Someone had it. I don't know. Future Investing. And I usually give all my updates when I'm going live, all that stuff. That is the platform where I communicate on text. Thanks. Appreciate your time. Bye for now.